Introduction: 95% of traders lose money. But here's the twist nobody talks about. It's not because they can't read charts or spot opportunities. It's because they're climbing the wrong mountain entirely. Welcome to Trading Psychology Stick, where we decode the mental game behind every winning trade and every crushing loss. Disclaimer: nothing here is financial advice. This is about the psychology separating those who merely survive markets from those who genuinely thrive in them. Picture this. You're standing at the base of a mountain, not made of rock and ice, but built from numbers, candlestick charts, and your own raw emotions. Every chart you open is another foothold. Every order you place is another step upward. And just like climbing Everest, the market doesn't care if you're exhausted, terrified, or desperate. It will test you, break you down, and then, if you learn its rhythm, allow you to rise. This is the Tao of Trading, not a magic formula or secret hack. A way of moving through financial chaos with balance, clarity, and purpose. Today you'll discover that the real enemy isn't out there in the market. It lives inside you. The doubt whispering you're not good enough. The greed pushing you to hold just a little longer. The fear freezing your finger over the sell button when every signal says get out. Jesse Livermore was one of the greatest traders who ever lived. He read markets the way poets read human emotion, intuitively, brilliantly, ahead of everyone else. Yet he lost everything, repeatedly. Not because the market outsmarted him, because the mountain inside him was steeper than any crash he faced. Then there's Paul Tudor Jones. In 1987, while the financial world sleepwalked toward Black Monday, Jones was watching and preparing. When the avalanche hit and billions vanished in a single day, Jones didn't just survive, he triumphed. His discipline became his rope when everyone else was in freefall. Here's the paradox at the heart of everything: the higher you climb, the less this journey is about chasing profits. It becomes about mastering yourself. Strategies and indicators are your tools. But endurance, patience, and courage, those live entirely within you. Section 1 C. The market is your mirror. The first truth is startling, and many traders never fully accept it. The market is nothing more than a mirror, not of prices or news, but of you. You place a trade, it reflects your impatience or patience, your greed or discipline, your ability to sit with uncertainty, or your desperate need to control outcomes. Traders believe they're fighting the market. The real truth: they're wrestling with their own shadows projected onto a screen. When you look at a chart after a sharp drop, do you see danger or opportunity? The numbers are identical for every trader staring at that screen, but your emotional history, your fears, your beliefs about money, paint that neutral canvas with either threat or promise. Dr. Alexander Elder, a psychiatrist turned trader, argued that markets are the world's largest psychological testing ground. Every price tick asks one question: will you stay calm or will you panic? Elder believed trading success is 80% psychology and only 20% methodology. So when you stare at a chart, what part of yourself stares back? The reckless gambler, the anxious perfectionist, or the patient strategist who trusts the process? Think about your last loot trade. What was the dominant emotion? Fear, anger, denial. Identify it. That single word of awareness is your first rope on this mountain. Section 2Z. Saboteurs in the shadows. Every mountain has hidden crevasses, places where ground looks solid until it swallows you whole. In trading, those invisible cracks are your psychological biases. Bias, loss aversion, anchoring. Overconfidence. They never carry warning signs. They arrive disguised as common sense. Confirmation bias strikes the moment you enter a trade. Your brain immediately hunts for evidence you're right while filtering out every warning signal. You cherry, pick bullish headlines, highlight supporting technicals, dismiss red flags completely. It feels like clarity. It's actually fog thick enough to consume your entire account. Loss aversion cuts deeper. Research shows the pain of losing money is psychologically twice as powerful as the pleasure of gaining the same amount. That's why you stare at a deep red position whispering, "Who'll come back?" even as it keeps sinking. That whisper is the saboteur quietly cutting your rope. Anchoring is subtler but equally destructive. A stock once traded at $100, now it's at $60. You anchor to that old price as its true value, convinced it must return there. But the mountain doesn't care where you started. It only cares about your next step from exactly where you are now, and overconfidence, the cruelest saboteur, strikes hardest after winning streaks, when you feel most invincible. Ed Sikota said it plainly: win or lose, everybody gets what they want out of the market. For the overconfident, what they secretly want is to feel unbeatable. The mountain delivers the opposite. The turtle traders proved that even simple mechanical systems create millionaires, but only when traders obey the system instead of their biases. Said it perfectly. Our biggest enemy wasn't the market, it was ourselves. Section 3 From Chaos to Flow. Halfway up the mountain, air thins, wind shifts without warning. Every step could end in disaster. This is exactly how most traders experience markets early on: overwhelming noise, random, seeming moves, a battlefield where every headline feels like an avalanche. But beneath surface chaos exists a deeper rhythm. When you find it, everything transforms. Burry understood this before 2008. While the entire world celebrated unstoppable housing prices, Burry heard different rhythms, cracks forming in the ice beneath everyone's feet. Crowds danced to euphoria. He moved in a focused flow state, allowing decisive action where others froze. That mental state carried him through one of the greatest financial storms in history. Flow isn't mystical. Psychologists describe it as the state emerging when challenge meets skill in perfect balance. You're fully absorbed. Time warps. Distractions vanish. In markets, this means you're no longer paralyzed by competing signals. You're tuned to the few that genuinely matter. Flow emerges from preparation combined with presence. Study your past trades. Clear rules. Rehearse scenarios until responses become automatic. Strip away unnecessary complexity. Only then does flow reveal itself, a rope appearing through fog exactly when you need it. Section 40: Risk, Reward, and Probability, the three pillars. The path narrows to a ledge barely wide enough for careful footsteps. Out framework: the mountain is merciless. What keeps you moving are three invisible pillars: risk, reward, and probability. Your map, compass, and rope simultaneously. Paul Tudor Jones demonstrated their power perfectly in 1987. While markets roared with reckless confidence, Jones studied terrain with cold precision. He saw the profound imbalance between risk and reward the crowd was ignoring, understood collapse probability was far higher than prices reflected. Black Monday arrived and billions evaporated. Jones walked away enormously profitable. Risk is the distance to the drop below, maximum pain you'll endure if your handhold slips. Climbers set anchors before ascending, not after falling. In trading, that anchor is your stop-loss, the level where you cut the rope to save your financial life. Is the summit justifying the climb? Not every peak visible from below is worth pursuing. Many are false summits draining your strength without delivering the view you climbed for. Probability is the weather forecast. You may want the summit and accept the risk. But if storm conditions are likely, wisdom says wait for better conditions. Stacking odds deliberately in your favor. When all three align, risk small, reward substantial, probability favorable, you create asymmetric opportunity. Limited downside, meaningful upside, odds tilted convincingly your direction. This builds your rope bridge across chaos. Most traders treat these pillars separately. Focus on reward, forget risk. Obsess over probability, ignore position size. All three must work together. Like tripod legs, remove one and everything collapses. Section 5: Position Sizing, the secret of survival. High on the mountain, survival depends not on brute strength but on precise balance. Every step measured, every weight shift deliberate. In trading, translates directly into position sizing, the most underappreciated factor determining whether you endure or vanish. Mark Minervini's real competitive edge wasn't some secret indicator. Sizing. He treated every trade as a fragile ledge crossing, never committing more weight than the rock could bear. By risking only small percentages per trade, even when a ledge crumbled, he survived to keep climbing. That discipline transformed him from a struggling trader into a US investing championship winner. Traders fail not because their ideas are terrible, but because their sizing is reckless. They load half their capital into a single position, drunk on conviction. Watch one unexpected event shatter months of progress in an afternoon. The rule is simple, but psychologically difficult. Never risk more than 1 to 2% of total capital on any single trade. A brutal losing streak of 10 consecutive trades becomes painful but survivable, bruises rather than broken bones. Think of how casinos operate. They don't win every hand, but by managing bet sizes relative to odds, the house always survives long enough for probabilities to play out. You must become your own casino. Section 60: Building a system you trust. There's a point on every mountain where terrain looks identical in every direction. Relying purely on instinct wander in exhausting circles. Climbers with proven maps follow tested routes. In trading, this is the difference between gut, feel trading and systematic trading. A genuine edge isn't born from inspiration. It emerges from a repeatable process you trust unconditionally, especially when fear and greed are screaming loudest. Richard Dennis proved this definitively. He recruited ordinary people, teachers, accountants, a security guard, gave them clear mechanical trading rules, and sent them into markets. Many made millions. Their success proved intuition is fragile, but a well-designed system is durable. Strategic edge is simply this: a thoroughly tested, disciplined approach applied consistently, replacing should I or shouldn't I with calm clarity. If X conditions are present, execute Y action. Without it, every market movement feels personal and threatening. With it, every movement becomes useful data. But here's the paradox. Purely mechanical systems eventually fail if treated as magic. Markets evolve. The best traders blend system with awareness, rules keeping them safe, combined with continuous observation and refinement, like Jim Simons and Renaissance technologies, whose real edge wasn't just formulas, but constant adaptation, always refining, never letting the mountain's shifting face catch them unprepared. If you don't have written rules for entry and exit, you don't have a system. You have hope. Isn't a strategy on this mountain. Section 7. The emotions are signals, not enemies. On the mountain, you feel approaching storms long before they break. Sky darkens. When shifts, particular silence settles over everything. These aren't distractions, they're critical warnings. In trading, emotions function identically. Fear, greed, euphoria, doubt. Traders treat them as enemies to suppress. The Tao whispers a subtler truth: emotions aren't to be silenced. They're to be read. George Soros had an unusual practice. His back ached during a trading day. He re-examined his positions immediately. His body often sensed what his conscious mind was still processing. That physical unease was his subconscious integrating information too complex for purely rational analysis. He always listened. It saved him more than once. Fear, encountered honestly, one of your most valuable signals. It swells when risk is too large, when your position size exceeds what your nervous system can rationally manage. Ignore it, and it escalates into panic. Respect it, and it becomes a rope pulling you back from edges you shouldn't be standing near. Greed signals differently. It surges when you've tasted success and feel invincible, warning that danger lies ahead. This is when traders over-leverage and abandon stops, mistaking momentum for immortality. Rather than fighting these feelings, treat them as barometers. Screaming, perhaps size is too large. Greed rising, maybe stops are too loose. Euphoria blinding you. Step back and journal before the inevitable fall. Time your chest tightens while trading, don't bury it, pause. Ask what this signal is pointing toward. Write it down. That awareness could save your account. Section 80. Risk alchemy. Turning losses into fuel. No matter how carefully you climb, sooner or later your foot slips. The question is never whether you'll fall, you will. The only question is whether you'll survive and keep climbing. This is risk alchemy, transforming the inevitable reality of losses into fuel powering your continued ascent. Stanley Druckenmiller built his legendary track record not primarily through massive winning trades, but through ruthless capital defense. He said repeatedly that the key to success wasn't being right more often, it was losing the absolute minimum when wrong. The moment conditions shifted against him, he cut the rope cleanly and regrouped. That discipline kept him active for decades, long after countless bold traders were buried by leverage avalanches. A stop loss isn't failure. It's a calculated sacrifice, the price of staying alive. Every loss is also information data about your system, your psychology, your timing. Disciplined traders journal losses and adapt. Disciplined traders bury them and repeat the same fall. Alchemy is transmuting failure into knowledge, scars into wisdom. Nassim Taleb's concept of antifragility applies perfectly here. Systems that don't just survive shocks but grow stronger from them. A trader treating losses as tuition builds a skill fortress no single market crash can topple. Set stops before entry. Size positions so losses are survivable. Record outcomes as data points, not scarlet letters. Remind yourself daily, markets don't reward ego survival, they reward capital survival. Section 9. The Zen of Discipline. The higher you climb, the more the mountain tests your resolve. At this altitude, it's no longer strength carrying you, it's discipline. The quiet, unglamorous force keeping one foot moving after another when everything screams to stop. Ed Seacoter once said, "The elements of good trading are cutting losses, and cutting losses." He didn't build his extraordinary returns through secret indicators. He built them through discipline functioning like a monk's vow. Others chased fads and panicked at volatility. Seacoter's consistency compounded modest accounts into fortunes. His lesson: discipline isn't a cage. It's freedom from chaos. Discipline is built through ritual. Journaling trades, reviewing setups, rehearsing entry and exit rules before markets open. These aren't chores, scaffolding holding your mind steady when storms hit. Each ritual is a rope fixed into rock, ensuring that when fear or greed pull you sideways, you remain anchored. Discipline is also about restraint, saying no 9 times so you can say yes once with full commitment. Not every opportunity deserves action. Not every ledge must be crossed today. Tomorrow morning, before opening any chart, write down your plan. What are you looking for? What triggers your entry? What triggers your exit? If you can't answer these before markets open, trading with discipline, you're improvising on a cliff. Section 10. The Tao of Resilience. Every climber falls. True mastery isn't measured by how high you climb in perfect weather, measured by how completely you rebuild after avalanches sweep you backward. In trading, this is resilience. The art of absorbing punishing blows without breaking, transforming collapse into renewal. Ray Dalio in 1982 was supremely confident in his predictions. He bet everything on an economic collapse. When markets surged instead, he was ruined. To borrow money from his own father. Most people would have quietly disappeared. Dalio rebuilt. Out of that complete humiliation emerged Bridgewater's principle-driven system, specifically designed to prevent overconfidence and stress, test every idea. His resilience didn't just produce a comeback, it forged the world's largest hedge fund. Requires humility. Markets humble all climbers regardless of skill. Resilient traders accept this, build buffers, proper position sizing, diversification, cash reserves, so storms can never wipe them out completely. Journal every fall, but don't just record numbers. Capture the emotions, thought patterns, and blind spots that contributed to it. Design specific rituals to counter them. If greed tripped you, shrink your size. If fear froze you, rehearse your system until execution becomes automatic. Over time, scar becomes a new layer of armor. The Tao whispers, fragility resists and shatters. Resilience absorbs and endures. Antifragility transforms and rises higher. You're not climbing to avoid falls, you're climbing to become the kind of trader who grows from them. Conclusion, your real climb starts now. You've walked this entire mountain with me, through storms of fear, across ledges of risk, past avalanches of unchecked emotion. Now I want to ask you one important question. What will you actually do with the rope in your hands? Because this wasn't just stories about historical traders, it's about you. Every candle you watch, every trade you place with real money at genuine risk, every choice you make when uncertainty is pressing in from all directions. Those are your steps on this mountain. The Tao of trading is a living practice. It's managing risk when your pulse is racing, sizing correctly when greed tempts you to go bigger, journaling honestly when doubt clouds everything. Patience real, disciplined patience. Markets bait you with noise designed to trigger your worst impulses. And the courage to fall, extract the lesson from the pain, and rise stronger than before. What I want you to do right now, take one single idea from everything we've explored. Just one. Apply it in your very next trade. Maybe it's defining your exact risk before clicking buy. Maybe it's cutting position size in half so fear loses its grip. Maybe it's writing down why you're taking a trade so you can see yourself clearly in the market's mirror afterward. Try to master the whole mountain in one day, one step, then another. That's the only way anyone has ever climbed anything worth climbing. Before you go, type below the one trading habit you're committing to change starting tomorrow. Not next week. Tomorrow. Make it specific. Make it real. If this journey spoke to something true in you, subscribe to Trading Psychology Stick. Share this with someone still struggling at the base of their own mountain. No climber should have to figure this out alone. The summit isn't the end, only a place to see more clearly. You are the mountain. The market is your mirror. And the Tao of trading is the rhythm carrying you higher, one deliberate, courageous step at a time. Real climb starts now.